What if I told you that right now, silver is making a move, and almost nobody is paying attention? Not the banks, not the mainstream media, not your financial advisor, but the data is there, and it's speaking clearly to anyone who knows how to read it. I'm not here to tell you what to buy or sell. What I am here to do is walk you through the patterns, the history, and the fundamentals, so you can make your own informed decisions. This is Silver Signal, and if you care about understanding the precious metals market before the crowd does, hit subscribe right now and tap the like button. We break down what the mainstream misses, and today's video is one you genuinely do not want to skip. Before we go any further, everything you hear on Silver Signal is for educational and informational purposes only. This is not financial advice. I'm not a licensed financial advisor, and nothing in this video should be taken as a recommendation to buy, sell, or hold any asset. Always do your own research. And if you need personalized guidance, please speak with a qualified financial professional. Now, let's get into something really fascinating. Most people think gold moves first and silver simply follows. But when you look at historical data across multiple silver bull markets, a different and far more interesting pattern emerges. Silver often begins to quietly accumulate institutional and industrial buying pressure weeks, sometimes months, before gold makes its dramatic public move. By the time gold is dominating the headlines, silver has already been forming its base. The investors who understand this pattern are already positioned. The ones who don't are left buying at the top, wondering what they missed. Here's the fundamental reason this happens. Silver is not just a store of value, it is one of the most industrially critical materials on the planet. Solar panels, electric vehicles, semiconductors, medical equipment, water purification systems, all of these depend on silver, and none have a readily available substitute. So when global industrial demand starts picking up, when solar contracts get signed, when EV production ramps, when chipmakers scale, silver demand quietly rises in the background. And that demand doesn't immediately show up in the spot price. It shows up first in inventory data, in futures market positioning, in the movement of physical metal between vaults. By the time the price reflects it, the early movers are already sitting on significant unrealized gains. There are three specific indicators Silver Signal tracks. The first is the gold to silver ratio, how many ounces of silver it takes to buy 1 ounce of gold. Historically, when this number gets stretched, above 80, 90, or even 100, it has often preceded significant silver outperformance. That doesn't mean it happens immediately, and it doesn't mean it's guaranteed, but the historical record shows meaningful silver recoveries following extreme ratio elevations. Understanding where the ratio sits today relative to its historical range is one useful data point in a broader analysis. The second indicator is structural industrial demand. The clean energy transition and the AI infrastructure boom are both deeply silver intensive. Every solar panel needs silver paste. Every data center has silver components. Every EV has silver in its circuitry. These are measurable, growing structural demands, not speculation. A mining supply faces a unique constraint. About 70 to 80% of silver is produced as a byproduct of copper and zinc mining. You can't simply increase silver output on demand. Supply responds slowly, demand can accelerate quickly. That structural mismatch is worth understanding deeply. The third indicator is COMEX registered vault inventory data. When physical silver is withdrawn from registered inventory, buyers want actual metal, not paper exposure. When that trend develops alongside a stretched ratio and rising demand, it creates a historically significant convergence of signals worth paying close attention to. Now let's zoom out. We're in a period of uncertain real interest rates, shifting currency dynamics, and ongoing geopolitical tensions that make investors rethink asset allocation. Assets outside the traditional financial system, things you can hold physically, not backed by any government's promise, tend to attract increased interest in environments exactly like this. Because gold gets the media coverage, retail money flows there first, silver moves quietly, underowned, underdiscussed, and undervalued relative to historical norms. By the time retail enthusiasm shifts to silver, the early phase of a potential move may already be well underway. Understanding this psychological sequence is central to what Silver Signal analyzes. None of this means silver will move in a straight line or on any particular timeline. Markets can be volatile and unpredictable. Always know your risk tolerance and consult qualified professionals. Are you currently watching the silver market? Drop your answer in the comments right now. I read every single one, and your perspective shapes what Silver Signal covers next. If this analysis gave you something useful, please share this video with someone who follows precious metals. You could be putting valuable information in front of them at exactly the right moment. Subscribe to Silver Signal, hit the notification bell, and I'll see you in the next one, where we go even deeper on technical price levels and what historical cycle timing tells us about where this market could be headed.